Okay, Rudy here, 26th of October. Welcome to the weekly dividend series. So this, I guess this dividend series really backs is like an add-on to this, what I call the Tank MVR. If that's unfamiliar to you, I'll leave a video all about the Tank at the end of this one. But essentially this is your core holding, and then depending on your risk profile, if you want more divs, then that's what this vid's about, or if you want more growth, then that's the ninjas, different series. Okay, so MVR, resource companies, the ETF will probably pay you in the high threes when you look at the underlying companies. Okay, so let's get on with it. So we'll start with interest rates first. So it's quite interesting. So long term. So this is the 1 year government bond yields. So this is essentially a bullish chart pattern, which means higher interest rates. Like structurally, that's what the chart's saying. So this is a weekly chart. So you can see we broke out, and then last week, this week, came right back down. So it's currently sitting at 3.4. So technically, that's potentially a buying option, which means potentially rates going up. However, a breakdown may lead to the market thinking rates are going lower. So it's very interesting. I guess they're stuck between unemployment and inflation. Are we heading to stagflation? This is the 10-year government bond yields. So similarly, bullish chart pattern. Here's our wedge break, and we're forming another declining channel / wedge, which again is bullish long term, so higher interest rates. So yeah, interesting. All right, well, on to the divs. Okay, so get the fact sheet out of the way. So there's a few different places you can get dividends. So I use Morningstar, and for my new series, I've sort of started for people to build their own portfolios in Australian super, where you can buy ASX 300 stocks. Most of these shares I'm going through are in the ASX 300, so they can be added. Yeah, you can buy these yourself. Okay, so ALX, so infrastructure, toll roads, 8.1%, looking very nice. It's done the break and the retest, and it's doing another retest. So that looks like a very attractive buy. ACF. So they're forming a bullish pennant flag there. Hire and sale of specialised equipment, framework scaffolding, 5.2. AGL, you know who they are. So they're paying 5.9. So they still look okay. So they're going to decide what they're going on around here. I keep saying still don't know who's going to pay for all this. It's either the government's going to fork out money, or we're going to pay through higher bills, or AGL's going to make less profit. But they seem pretty intent to pay their dividend regardless. ANZ, it's got the highest div of the major four, 5%. Interestingly, sitting right at resistance here. Technically, it's made its move this distance to this distance. So yeah, my preference actually is CBA, but his div's not that great at the moment, but for like a capital growth buy. APA, so pipeline 6.2. I mean, I'd have to give that another, give him another buy. He was definitely a buy down there. There's your declining wedge break. So pipeline gas, Horizon, so they're 4.6. So rail freight operators. Bendigo, so they're 5.0. So not one of the big four, but if you like banks. BFG, so 5.6. Then the sort of financial services / portfolio admin with joining up with premium. Anyway, it's forming a bullish pattern. Beach. So I've done the big oil video. If you haven't seen that, actually I'll leave it at the end of this if you haven't seen it, along with the MVO one. So 7.2%, fully franked, sitting on support. BWP, so a REIT, real estate investment trust. So they're in the warehousing, bulky goods. So nice space, 4.9. Mr. Cynical put that forward. CAF, Centrepoint. Currently, so Mr. Alberti. So 7.9. So diversified financial services company, provides financial advice, licensee support, investment technology solutions to financial planners, etc. Anyway, so 7.9 is pretty attractive. It's come back down to support, so not bad. Cash converters 5.5, so they're looking pretty good. Dicadata 4.5. He was one of my favourites down there, and he was about 6. Anyway, so they're wholesale IT wholesaler. DBI 5.3. So they're take a clip on the Derry Bay coal terminal. So Jimmy Carter, we've got a few divvy subs in here. DRR. So he's in the MVR. So he's paying a div of 5.5. Royalty company, just takes a clip of BHP's iron ore. So pretty lethargic. Doesn't have to do very much. Horizon also that we went through before is in MVR. Dexus, a REIT, 5.5, focusing industrial properties, no office exposure. Elders 4.9, the shop for the farmers, it's looking alright. FMG 5.5, so breaking out of a nice consolidation there. It looks very nice. FMG is also in MVR. Fleetwood, FWD. So they manufacture accommodation facilities, modular housing. Maybe that's how Elbow's going to get his plan to build new houses. Just give everyone a modular house. Actually, I see Tesla have developed a capsule where you can. It's just a house. Okay. GQG, so they're a global fund manager. So I'm not putting a buy on these guys yet. I'd like to see them come back here. It's a pretty competitive space, fund management, competing with ETFs, but it was keep watching it. HDN, Homeco. So a REIT, convenience, so retail property stores, your local metropolitan shopping centre, 6.2. HLI, Helia Group, so mortgage insurance. So there's got to be a bit of demand for them. IGL. So this is from Billy. So integrated marketing, visual communication solutions providers. 6.7. Div. Looks pretty good. ING, the Chicken Man. 7.5. So I'd like to see him. Just get rid of that. I'd like to see him do a little bit more. But I reckon it's at some stage it's going to be a good buy. But he was hit pretty hard. I put a sell back here on him. IPH, so intellectual property services, 9.3, not 9.1. They're just sitting at this long-term support area, starting to look attractive. I'd like to see a little bit more before pull the trigger. COV, actually this is a new one, interesting business. So 4.9, industrial manufacturing in hot dip galvanizing, sheet metal fabrication, production of cable and pipe support systems. So seems pretty solid. Seems like their services products will be required. Perpetual. So from the big cheese, 5.7. So it's technically still, well, it needs to break here to be bullish, but Perpetual's a pretty solid company. JMS, so they got an interest in a South African manganese mine. Manganese is one of Trump's, he's spoken about them metals. Anyway, 6% div, looks pretty good. Macmillan Shakespeare, 8.8. So their salary packaging, support all, provide services to all those government employees that Elbow's hired. Magellan, so they're another fund manager at 5%. Sort of just keeping my eye on these ones, just put them in there because the div's not too bad, but it's a bit like GQG, it's competitive. MIS, so they're 5.1, a Tasmanian financial services company. Anyway, it's forming a long-term wedge there, which is bullish. Okay, now I like this one, New Hope Corporation. I reckon coal, a bit like oil, buy stuff when it's hated. 8.2%, around support. I reckon, along with the one my favourite one, which we'll get to, is good. PFG, Prime Financial, 4.8. So accounting, business advisory services, wealth management, administration. So in that space, 4.8. Bit of a rounded bottom going on there. RFF, so 6%. So they looks like they've found their new support, paying 6%. They hold agricultural assets. So that looks very nice. RMC, so residential mortgage and asset finance lending portfolio. with some diversified financial services, 6%. So they look like they might want to come back and test. So it's not a buy now. It was a buy there. Rio. So 4.6 there in the MVR ETF. So, okay. Spark, 10.5. I don't know if I pulled the pin a bit too early or not on this one. So its first challenge was, or positive challenge was that that's a declining channel. Declining channels when broken are bullish. So it's holding in here. So to be safe, I'd like to see it above 220. But the div's 10.5. Santos, another. So they're 5.5, but div's only 60% franked. So my winner, if you're a dividend investor and you don't have this guy Woodside in your portfolio, you're doing a disservice, I reckon. I reckon you were picking the bottom out of Woodside right now. A div of 6.9, fully franked. He wins my dividend bet. Treasury Wine Estates, 6.3. So it looks like they're back to the 2014 sort of support resistance area. So it's hanging on there, but I'd like to see it get above $7 probably, just to be sure. Tower, TWR, General Insurance, 7.8%. So they look like they're on their way. WPR, so another REIT, some cynical, 5.9. Service stations, so doesn't look too bad. Alright, so they're all the ASX 300 shares. Then there's some ETFs. So you got VHY, it's a popular one. They've got basically some miners and the banks, along with Telstra. So that's and there's SYI, which is another dividend ETF, more bank heavy, with some Telstra and Woodside, bit of Fortescue. So I still my preference, if you're a real divvy investor, is to buy the shares, because then you get the franking credits. It's not these ETFs tend to distribute capital gains. And anyway, I'd love to know though if anyone's invested in VHY or SYI, and let me know your thoughts. And the last one is YMAX. So they pay a good div, 7.5. But they, as you can see, they miss out on capital growth because they make their extra cash through writing call options. So if they take a premium, they take the option premium. But if the share price goes up and the person exercises it, they got to hand the shares over. So but it pays a nice divvy. Alright, that's your weekly dividend wrap. If you've got any other ones out there, please share. Alright, see ya.